All right, testing. There we go. Okay. What's up? Happy Friday, everybody. I got a lot to talk about today, and I do not want to be muted. The main thing I want to look at is what is going to be the next bullish market, because it's pretty clear to me now that, or it should be everyone, that like the world order is changing. And in 6, 12, 18 months from now, there's going to be some asset or some companies or something that's going to be up big, and it's going to look back in hindsight, and we're going to think, wow, that was obvious. That's the case it was in COVID. That's the case it was in 2008. And I want to find that now. And so that's going to be my objective going into these next days and weeks, because things have dramatically changed and shifted, and there's a lot of opportunity that's going to be out there. And it's not going to be obvious right now, but in hindsight it will be. But I think we can find it. We're going to use some tools to do that. So let's let people filter in, and we'll be right back. All right, I'm just going to jump into it because there's a lot to talk about today, obviously. What I was going through here, this is ES futures from this week. The 50%, which I've talked about in terms of trading technical indicators, I try to keep it very, very sparse. All you really need is just 50% retracements. Just to kind of recap, but there's a lot to recap from last week. What we basically hit on this whole move down on Monday of this week was Monday? Yeah, it was Monday. Was the 50% retracement from the October 2022 low to the all-time high back in February, right there at 4,834.25. What a matter of perfection that was. Where is it? Right there. Right there. Ping on Sunday night, since we last left the live stream on Friday. Oh, it's perfect. And then on the top side, where did we top out? From the all-time high down to here, right there at, let's call it 5,500 or 550 SPY. 50% to 50% to 50%, and then all week things have been responding to 50% levels in terms of day trading. Since the big tweet this week, obviously, that moved the markets up. I'm debating on talking about that or not, because I try to keep politics out of trading and investing, because I think people get led astray by their personal biases. But the markets are so news driven right now that you almost can't avoid it. But even if you didn't know, you should still be able to play 50% retracements for anything that you do, from high to low to high. You don't actually need to follow the news to trade. I promise you. Literally just do TA. Even today, off the low to the high of the range, but boing, triple, just 50%, 50%, 50%. So just whatever you do, if you're using Fibonacci's or anything, just take everything off except the 50%. And that's all the technical teaching that you really need. And I should just sell a class, I suppose, that just talks about that. No, I'm never going to sell classes. I'm just going to talk about it. Now, what I want to do for my own research, I want to work through this with you guys, is what I'm looking to buy. There's going to be some asset that in 6 to 12 to 18 months is going to be rocketing up, and in hindsight, it's going to seem obvious that this trade war, this tariff war, was the cause of it. And again, I need to figure out what that is now. Everyone should. Now's the time. Like, I've been trying my best to read books. This is Ray Dalio's The Changing World Order, where he talks about, the rise and fall of empires and their currencies, and they all follow the same kind of patterns. But what I realized was, as I'm reading that, I'm a little bit of an older millennial, but the internet has already ruined my attention span. And after reading one chapter, I decided to go to AI and just ask it the questions I wanted to know. I mean, there's a lot of information and knowledge and wisdom I can gain from that to understand what's going on right now, because we're changing what has been going on for the last 30 years, where China has dominated manufacturing, and now the United States is saying we're not doing that anymore. A lot of changes there. There's a lot of shifting that's going to be going on. I mean, we have to start looking at foreign exchange, the Forex markets. Now, Forex markets, in case you don't know, this was the original degen market. It trades 24 hours a day. There's virtually unlimited leverage. And so it basically served the kind of the purpose that crypto people do now. It's just before crypto. I first cut my teeth in Forex. And if you've watched my live stream for a while, you know that the trade that I'm in, that I put on about in March, early March, was the USD CAD. In other words, I'm betting on the dollar going down and the Canadian dollar going up. And go back about a month ago, where everyone was saying that the Canadian dollar, the Canadian economy was going to suffer because of all these tariffs. Well, I like to go against what everyone is saying. And it also made a nice, clear spike right there on the weekly. Now, another thing you got to understand about Forex, you can trade it 24 hours. You can do a 1-minute chart if you want to. There's a lot of stuff in here, but if you're going to do the really important, systematic moves in Forex, it's going to take like a daily or the weekly time frame. But you can knock yourself out. But this is what I'm going to start looking at a lot more. You got to understand that. Well, I'll go through my process I went through this week. I'll redo it with you guys to see how I came to a couple of conclusions. On that note, while we're looking at it, by the way, here's the weekly of the dollar Chinese yuan. And the narrative all week has been the Chinese are going to devalue their currency. Well, they did up until this week, and we have a spike right at a triple, quadruple top. Now, just give you a quick recap to understand. Let me make sure I'm not reading chat, so let me make sure that you guys are kind of don't have any. Yeah, if you got questions, guys, make sure you put it in the chat. But let me fill you in on what Forex basically means. If you have the first 3 letters, that's the first currency code. Okay, USD, pretty obvious, US dollar. The second 3 letters are the other one, and so you got to think of it like a division problem. You have dollars divided by the second one. So it's USD slash the next currency. And so if you can do USD EUR if you want to think in terms of the what is it? Is it the numerator and denominator? So the numerator currency will be what you're seeing as far as, it's going up and down. So here, USD is the first three letters. So we're looking at the USD, which if the USD goes up, the chart goes up. If the USD goes down, the chart goes down. And then you have to think in terms of the inverse relationship. You just flip it, okay? And that's, you're going to notice, is very similar to the DXY, the dollar index, which is definitely making new lows and doing a breakout to the downside. Now that's going to have some implications we're going to talk about later when we talk about yields. Like I said, we got a lot to talk about because there's a lot of FUD out there and we got to cut through it. But I'm going to hand it to you what I've gathered, what the potential things I'm looking at, and what it could possibly mean. And I'm not going to try to scare with, if yields go to this, even though I made a post today about that. But just understand now. By the way, I'm not getting paid to say this, but if you want to look into Forex, Tasty FX is the company I went with just because I'm familiar with Tasty Trade, and it integrates very well with TradingView. To do it, you just need about $250 of an account, and it gives you a whole range of things to trade, but I think you're going to see a lot of movement in the Forex markets coming up in the next weeks, months, years even, because currencies move relative to each other based on interest rates, and right now you have actual major interest rate differences. Here is the USD divided by the Swiss franc. Now, for those that don't know, fundamentally, the Swiss franc is considered to be a safe haven currency. In periods of stress, people tend to buy Swiss francs, even though you actually lose a lot in the interest rate. You lose about 4% a year, because what you're doing is you're borrowing dollars at the 4.5% rate and then using those to buy Swiss franc, which is at a lower interest rate of about 0.025. And so you're losing that difference. But don't worry about that because it's down almost 8% in 2 weeks. And of course, leverage makes everything more fun, but just be smart about it. You can do some big things in currencies. But what's interesting about the Swiss franc is that they back their currency with a basket of assets, gold, stocks, I think maybe even real estate and things like that. And even Amazon, they own a lot. The Swiss National Bank owns a lot of Amazon stock. And so they have a whole basket of things they back their currency with, which is why people move to that as a safe haven, because it actually has backing. But that's just an example of some of the things you can see. I mean, dollar, what is the Mexican peso going to do in this? But the two things I'm really looking at mainly, well, three things now, is the U.S. dollar CAD, which I'm already short. In other words, I'm long Canadian dollars. The Australian dollar, which is doing its own spike low on the weekly. These are weekly spikes, by the way. And so these are the kind of trades that I would take if it was a stock, if it was a futures. It's just a technical setup, and then of course I don't know if I'm going to be able to trade it or not due to restrictions, but this is this right here, this spike here, because the reason is with a spike trade, when you're wrong. In other words, if it breaks that high, you get out. It's fine. It's that high because everyone thought it was going this way, and you got slammed back down into the consolidation below the low that it broke. These lows right here. When you're wrong, and I do this trade day in, day out. These spike trades. And so I'm seeing these on the weekly level of these currencies. And so there's some big moves happening. And basically, I would take this all the way back down to the 50% retracement that it came to, which is about 6.86. Might take a while. I mean, hell, this could take a year. But as long as I'm looking for the dollar to go down, that's what you're doing. But let's talk about what's related to that. Now, everyone's had their eyes on yields. We'll look at some of these in just a second. Okay. Let me look at yields, and then we'll look at some of these currencies in chat. Okay. So everyone's looking at the 10-year. 10-year, 10-year, 10-year. And I made a post today. I got to admit, I was doing a little bit of engagement bait because I'm basically playing into people's FUD about what happens if the 10-year goes to that. And it's important. It's important because the United States is constantly having to reservice its debt, and servicing that debt, in other words, paying the interest payments, takes a lot out of the budget. And we're going to use a lot. We're going to use some AI a lot in this live stream, by the way, not just for just because it's the hot thing to do. Because, like I said earlier, when I was trying to read the book and I started getting impatient, I just took to AI and I kind of outsourced my thinking there. Like you'll see what I'm talking about in a minute. We're gonna dig into history. There's a reason I said this is market history and did the little Studio Ghibli art. How much is the U.S. paying to service its debt now? Takes a while for ChatGPT sometimes to do these things, but let's see how fast it's going to be for us. So 582 billion. So yeah, basically as the rates go up and we have to refinance that debt, okay, that's too much. It's going to cost a lot more, but the danger zone is if this 10-year yield gets up into 6 and 7%, because that becomes a lot of the United States money is going to have to go to it. Now, do I think it's going to get there? No. In fact, what I think is funny as everyone's looking at that 4.5%, that's basically what it closed inside of today. Isn't that cool how that works out sometimes? Like that's that psychological level that everyone's looking at. 4.5, and yet that's what it hold and closed inside of. Yeah, things like that happen. But there was some news today that the Fed is going to start engaging the printer again. Hold on. So where's I need to have my memes ready. Yes. So there is talk. I think they actually released a statement that said the Fed is willing to step in and do things to support the market. What was that? Let's see. Where's the Ghibli printer? Well, that's what they said they might do. It's just vague, as they always are, but hey, a lot of people took that as bullish news because that is going to potentially lift all the risk assets, stocks, crypto, etc. Gold, man. Peter Schiff is really, really enjoying this time where he gets to dunk on the Bitcoin bros. Bitcoin, by the way, while we're talking about it, and then we'll go back to the currency. Had a big rally today, all the way back to prices seen last week. As I posted on X a little bit earlier, last week's, this is a weekly, the key level here still remains 79,285, which is the 50% of the all-time high to the swing low back in August. And it closed last week below it, and then for most of the days this week, it was also below it, okay? And so I'm still counting that level as broken. And then now, this week, right here at the close of Friday, it came back up to tag the volume profile point of control for the entire bearish consolidation period that we've been in. That's a resistance. That's a test. That's a point to load up if you're short. And then we'll see what happens because people are really excited to make all these recoveries. Oh, do you remember last week? Do you remember last week's video? Do you remember last week's live stream where I put out my own little tinfoil hat conspiracy theory about how they held up the market? And then I don't know if I'm right. We'll never know if I'm correct about that. But I was right that the memes over the weekend were decoupling. And they up until Sunday. And Sunday they gave it up. And yeah. It was just so bizarre to know that there is such a strong correlation between Bitcoin and equities. And then for the course of Thursday and Friday of last week, it was just held up and there was no movement, yet tons and tons of volume that you could see. Something was being manipulated. Okay, I don't know who it was. I gave a guess, but we'll never know what happened. But Sunday gave it up. And then through the week, as equities fell, so did Bitcoin. And then finally, when Trump tweeted, we launch. And then Thursday goes down with the market. And then today goes up with the market. We're coupled. They are coupled. They are a couple still. And they still are. And we'll see if they can hold it up. But the overall trend has not changed. We're not, we got to get back above that daily cloud for this to be bullish again. And we're really just testing a resistance now. So we'll see. We'll see. All right, so let's look at some of the things that people wanted. Let's see. USD Hungarian franc. So these can be somewhat a little bit harder to trade. Some exchanges won't have this for people to trade. Let's look at the weekly because we've been looking at it. So looking a lot like euro dollar, stronger than the euro dollar. Well, excuse me. No, that's inverted. Yeah, it's kind of hanging out. The thing that happens with these they call these exotic pairs because they're not very thickly traded as opposed to thinly traded. There's not much volume, and so your spreads can be very, very less than ideal. USD Hungarian franc could also be interesting due to geopolitics in the country. Tell me more. Ron. Okay, what Ron? That's Romania. Well, I guess you guys know that looks a lot like just the dollar index and the euro dollar. Actually, same thing. The dollar is devaluing, and that's why how the yield plays into it as well. But that's actually intentional. The reason the dollar devaluing makes U.S. exports more attractive, and that's kind of the intention of these tariffs is to get U.S. exports back up. But the problem is that it's raising yields, which means that the U.S. can't service its debt, and so it's really a game of chicken there. Oh man, interesting times. And you got to be careful who you listen to about this kind of stuff. Take me with a grain of salt, even. But I'm going to throw some shade a little bit on a friend of mine or an acquaintance of mine. Hopefully, doesn't mind. But like I said, I usually stay out of politics. But I got to talk about what I'm going to identify as anti-information because it really kind of came to a head for me this week. I got a buddy of mine that let me look him up here. David Vexler, enemy of fiat money, fiat food, fiat education. Basically, he has his whole career is centered around, like a lot of Bitcoin bros, is centered around Bitcoin. And talking about how the U.S. dollar is going down, how its fiat currency is going to zero, and I saw this come up, and so imagine you sold all your stocks to build a factory. Now there's a 90-day tariff pause. So this is what I mean by anti-information. You read this from people on Twitter, and you feel like you're getting information because he's saying something that's true, right? Because there was a 90-day tariff pause. I've just been informed. But then he says something to the effect of, anyone with a brain will exit the economy and sit on their cash. Okay, cash, he's not meaning Bitcoin cash because that would be a whole other can of worms to open up with Bitcoin maxis. He's talking about U.S. dollar cash. Anyone with a brain will sit on their cash. This guy, his entire personality is around getting people to abandon the U.S. dollar and buy Bitcoin. And in a moment of animosity, he's going to abandon his whole thesis and tell people if they have a brain, they're going to go to cash. This is nothing but a recipe for grift. His emotion has clouded his judgment for making sound investing decisions. And he's advocating for people to do the exact opposite of what he's been saying as long as I've known him. And so, as I tried to show, with 50% retracements and whatnot, you don't need to follow the news as much as it may think that you do to find levels to trade or things to trade. I mean, we have to know what's going on, but you can't get too deep into the weeds with people's opinions because they're going to be laden with bias. And there's a lot of, look, if you guys have been trading investing for long enough, I mean, you remember the COVID era. I mean, we were all going to die of, this disease, right? At least that's what a lot of people said. And a lot of decisions were made based on fear. And right now there's an abundance of fear because there's a lot of uncertainty in the market. And that's why I go back to what I said. There is a changing order. The market is changing, and I want to find out what to buy to benefit from that. That's my job. That is my job right now, is to find out. And I'm trying to make myself be insulated against all of this emotion where, people can say everything's going to go to crap. Okay, well all right. Well, do I buy crap? Like, is that what I should do? Like, give me something. No, like that doesn't help me to say, just everything's going to be bad. We're all going to be poor and living in huts. No. What are you saying? Like, what am I to gain from this? So I want to ignore that. I want to, if it's not something that's actionable information, I want to, waste management deals with crap. It is a massive echo chamber in both directions. People seek out echo chambers because nobody really wants to. Is that a spike? Kind of is. No, don't spike my favorite stock, waste management. Damn. Yeah, and there's no information to be gained from that. I've decided that kind of discourse, because it's all just things are going to be bad. Okay, well, everything can't be bad. There's going to be winners and losers. Okay, but how do I find those? Well, let's ask ChatGPT. So here's a couple of things that I've been trying to do and thinking about. And this is kind of the meat of the discussion today. All right, so let's see. So we want to consider the trade war between the U.S. China. What are some historic parallels between major nations in history and the goods and industries that were affected? And so we'll let that process for a second. But what I want to do is, just like I look back on a chart, I want to look and see what are the kind of patterns that emerge from a trade war, or specifically, if I can, tariffs. I've already done this research, by the way, so I'm kind of redoing it for you to show you the process I went through. But the really big one we're going to kind of probably look at, and this is old school stuff, but is the British and the Dutch back in the 1600s. There's also the one for the American and British trade disputes, right? And so now, but how do we make this actionable? Like, in other words, we're not really dealing with tea and textiles now, are we? Well, let's continue this parallel and think about what the industries compare to in the modern day. Make me a table. So let's see. So at the top of the list here is kind of what I've been focusing on this week, at least. And there's a lot of stuff out there to look at, but some of the things like spice and things like that, or tea and textiles. I mean, they're consumer electronics. Some of the goods are rare earth minerals, which I think is a big thing. And I'm almost gaslighting myself a little bit because everyone seems to be aware of that. Someone even, I think, posted that the most recent Call of Duty is based around a U.S. versus China trade war over rare earth elements. And I'm like, crap. Like, is it that obvious? If it's that obvious, I don't know if I want it that much. But it is a thing. And the countries kind of goes back to what I was saying with the Forex. The countries that are going to benefit the most from the United States closing off imports from China are going to be this was how it was explained to me. I learned back in my Forex days over a decade ago, the commodity currencies, which, Canadian dollar, and Australian dollar. They got these big land masses with mines galore, all these rare earth elements, all this oil, all these commodities that they can mine out of their countries, is what makes their currencies very correlated with commodity prices. And so if we start cutting off these kind of agreements with China or tariffing them where we need to find other exports, their countries and their currencies are going to benefit because people need to then buy Canadian dollars, buy Australian dollars to then purchase these goods from companies inside these countries. And so that's where my mind's thinking there. Consumer electronics, that's for someone that's like a semiconductor expert to explain to me, like, what's this going to do? That's another thing. So I don't really want to get into trading pork futures. Electric vehicles, it's going to be a big thing. Pharmaceuticals, that's related to the opium wars of the UK and China. See, this is the kind of research that I'm conducting right now, and I'm just do your homework. Start doing this, and if you guys come up with some good theses, make sure you post them and let me know. Like I would love to hear good theses about what is going to be the next bullish asset. Like I said, I don't want to hear everything's going to be bad. I want to know, hey, this pharmaceutical company, which has very little exposure to China, is going to benefit from this. One of the things that I looked at was actually we had this viewer. One of the things I love about doing these live streams is for idea generation. And I had an alert that I set a year ago on Whirlpool, which I posted about today. Now, what the hell am I doing buying an appliance manufacturer in a trade war? What the hell am I doing? Why would I want to do that? Well, first of all, it's because it's down so much because people think that it's going to be affected by the trade war. But it's also, I had it set up as a dividend play. Like right now, it's paying an 8.65% dividend, which sucks if the stock loses more than 8.5%, then you're gonna be in trouble. But this was at a major volume profile level, going all the way back to the 2010s. So this is why I had the alert set over a year ago when we talked about this on stream, and so that triggered this week. And it's also encompassing the COVID low, like I said, 8.65% dividend. # not financial advice, but this is a lot like these stupid things that I've been doing with Dollar General. I mean, who the hell wants to buy that company? Well, it's up how much this year. Had a nice pullback this week, by the way, as risk on continued. And this is another, hey, learn about this. Well, let me clear my lines here. So do you see? So we picked this up at about 71.23 sometime in February. I say we because hopefully people, looked at it when I was posting about it on X and stuff like that. # not financial advice. But who wanted to buy Dollar General? Everybody was trying to buy NVIDIA this year, right? As I said, I don't want any tech right now. I still don't want any tech this year. But it ran up, and then where did it stop? What is so significant about 97.85? Gap. Oh. Am I on mute? Hold on. Am I muted still? How long has that been? No, I think I can still hear myself. Testing. Yeah, I'm lighting up. Okay, thank you. I didn't know if I maybe hit the mute button or something. Okay. Getting a little animated here. I want you guys to look at gap levels. Okay, that's another lesson for today. 50% in gap levels, because that is exactly where it came up to and went. Now I'm still pretty bullish on it, because we've got a lot of room that can potentially go up. So we're just starting the bullish trend, but still, I thought that was really interesting to see that there. Also, Reddit, which has hitherto been a very good short, but it bounced right off of its gap level from October 2024 this week. That was not my trade, but one of my friend's trades. I'm remiss that I didn't short it, but that would have been the level. So gaps, guys, gaps. Well, I mean, actually, already held the gaps once. Well, it kind of missed those, didn't it? Oh, nope, hang on. Debatable. If you'd shorted it down to that level, you've been pretty good. So gaps. Two things technical we learned this week. All we need to know, 50% and gaps. So, yeah. Let's see. All right. Well, like I said, if you guys got some symbols to look at, make sure that you post them in the chat. But I want to see some ideas from some folks. Okay. Going back to what I was saying, the things I'm mainly looking at, currencies. If you can, start looking at that. And, yeah. Let's see, what else can we do here? Let's go down our research. Oh, let's, in Neo. Why do I want to do Neo, man? What did Neo do again? Were they a EV manufacturer? They're already giving up the volume profile level, bro. Like, there you had some trades off of that level, but it's already given it up. Yeah. You saw articles that they're going to take over EV dominance in the EU. No, Chinese cars are going to take over dominance in the EU. That's there is a Chinese manufacturer, which I don't know if we can buy. What is the major Chinese car EV company? See. BYD. BYD, I've watched some comparisons between BYDs and Teslas, and they are, global leader in EV sales. BYD overtook Tesla in global EV sales in 2024, and they basically have just kind of reverse engineered and copied a lot of Tesla stuff. I mean, these two companies, BYD and Tesla, they're the ones that are going to duke it out. No, there's no Neo in there. I mean, Rivian, what's Rivian doing? I would love for Rivian to work out, or I'd love for Tesla to buy Rivian, because I want a truck. I want an electric truck that looks like a truck and not like a stupid Cybertruck, because it does look stupid, that also drives itself like a Tesla. And so, yeah, that's... It's these two. It's like in any industry. This was a what was that guy that used to run GE? I'm outsourcing all my thinking. Who was that former CEO of GE that said a lot of stuff? A lot of people follow him as like one of the great CEOs. Jack Welch, and I thought it was Welch, would say, okay, what did he say? What did he say about companies leading in any particular industry? He basically says something to the effect of there's really room for three companies. There's a leader and like a challenger, and they own like 80% of the market share. And then they have one little niche company that's out there, the rule of one or two. And he sold off divisions that were not one or two in their market. But as a kind of extension of that, the market can support, like it's like Pepsi, Coca-Cola. Okay. What are some others that are like that? Companies that dominate any particular thing. It's kind of hard. There's so much opportunity here in America that it's kind of hard to point that out. But Coca-Cola, Pepsi is the main thing you can look at. And so essentially he would sell off any business. He came in, he sold off any business segment they had that was not number one or number two in terms of market share. Microsoft, Apple used to be the thing. Now it's Google and Apple, basically. And then what other is in the what other operating system is in the smartphone space other than Google and Apple? I mean, you got people that make little Linux clones, but they're basically Chrome, right? So it's still Google. Windows, Windows is actually a good operating system, but never got any footing, which is because of the rule of one or two. And so just to kind of recap, it's going to be BYD and Tesla. So if you're betting on EV, those are the two companies that you need to focus on. And you're just going to be fighting an uphill battle with trying to find like a third cheap company, and you're just going to be back holding. Sorry. So Apple and Samsung, yeah, for manufacturing for sure. Let's see what else. Let's just ask AI something. So let's go back to our thinking about the trade wars of history. What are some of the... Let's just ask it. What are some companies that are in the United States that will potentially benefit from a tariff-based trade war between the U.S. and China? Could it be this easy? Could it be this easy to just ask ChatGPT to tell us what to buy in the situation? Or do we need to read a book and learn more? I don't know. Let's try it. Oh, let's just keep it vague. Let's see if it tells us. What about the NASDAQ? Let's see. While it's looking that up, do a little bit of pricing. So NASDAQ and using the futures right now. So again, 50% of everything. The NASDAQ didn't quite hit its 50%. Doesn't mean it got close enough, right? But it's basically showing the same thing. And then on the downside, NASDAQ did hit its 50% retracement there. And so whether it's NASDAQ or equities, it's basically the same thing, okay? You're just going to have more volatility baked into the NASDAQ. So interestingly, as I said, guys, like, let's see, let's look at NVIDIA. So, I don't think that not to say FUD, but I don't think the fun is over in this market volatility. Be real careful of people that are saying that the Fed is going to step in, they're going to support equities, everything's going to be fine. V bottom maybe, or just because Trump said buy everything this week. Remember, if he had a tweet earlier this week. He said now's a great time to buy, which I thought was pretty stupid because the president shouldn't be issuing financial advice, but it actually was. Is it insider trading if he tells everybody? Who knows? But you remember the last time, just looking at Bitcoin, the last time that Trump tweeted and it pumped Bitcoin was here, okay? And then this is Trump's tweet here. So, like, have we really accomplished it? Have these tweets, have just these Trump things really lifted everything? I mean, again, when it comes to either NASDAQ or the S&P 500, I mean, this was Thursday of last week. We opened there. Or so this is basically Wednesday of April 1st, which is, back here to, we're not even back to where we were last week. So keep that in mind. And remember, we've also held that 50% support, or excuse me, resistance, which was support turned into resistance. So we're not out of the woods yet. This market is not bullish. Excuse me, it is not bullish. And I think people have started celebrating a little bit too quickly. I mean, VIX came back down. It's going to close the week back inside this key level here, but hasn't really abated that much. Volatility's still high. Market's still pricing in a lot more movement. It's a great time to be trading options. So let's see what ChatGPT said to us. I don't think we're going to get a sharp reversal until we actually get QE. That's what everybody's going to be looking for. I mean, I think it kind of sucks. Here, this is my opinion. I think it kind of sucks that we need to have liquidity pumped into the market because, a lot of the complaints from fundamental investors are how, hold on. What is the current forward PE of the SPX? What's the current forward price to earnings ratio of the S&P 500? So yeah, it's like the 12-month price to earnings ratio is approximately 19. Slightly below the 5-year average of 5.10, but above the 10-year average of 18.3. What was it during the 80s and 90s? So I think it's going to be like 14. Well, 80s was 6 to 8. Yeah, and then late 80s, yeah, 14. 14 used to be the PE ratio that everyone thought was like fair value, okay? Used to be. Now, of course, nobody cares about PEs because everything's based on speculation, but we're still pumping so much money into equities here and creating 1999 Ford PE hit 25 to 26, a record at the time. That was bad. What was it? What was it right before COVID? Hey, Inspector. Oh yeah, thanks for the like. Make sure you guys like if you're doing it. So, if everyone turns to ChatGPT, wouldn't that be the largest echo chamber? You know what? Like I said, man, I started reading this book. I started doing that whole thing that all the influencers say. You wake up in the morning, you journal, you read, you take off your strips, you get a bowl of water and you slam your head into it, and you wake up. I tried all that minus the water, but as I was reading, look. Books for me are a bandwidth problem. I just cannot download the information quick enough, and so I have to I need faster information. I need to come to a decision, and I could probably gain a lot more wisdom having a conversation with Ray Dalio, who's a renowned investor, made a lot of money, but I just rather ask the question and get the answer. I'm not saying this is a good thing to do. This is just where my mind goes. So the Ford PE on December 20th, 2019 stood at 18, which was also above the historical averages. So that's kind of goes to the point of if we're going to have QE. I think a lot of the speculation about QE, quantitative easing, by the way, or the Fed printing more money is based on projection and a desire to see that happen, because everyone wants their bags lifted, whether you're in crypto or you're in stocks or you want to buy a house and you want a cheaper mortgage. Everyone likes cheaper money. Everyone likes lower rates. But I've maintained for the last few since they raised it to what it is now, about 4.5%, that I think this is kind of historically normal. Rate cut odds. And there's a whole betting market right now. No, that's not it. The rates of interest cut at the May. This was March 24th before things started happening. So this was what it was back on March 24th. This is the odds of a rate cut. In other words, remaining the same, 4.25 to 450, was 91%. But now, this is this week. We have one from today. It's April 8th. Had a big jump. That was when all this stuff happened. It's basically it's almost a 60-40 if we're going to get a rate cut. And this is what is implied by futures, but then they also have betting markets for this as well. So more people think that we're going to get a rate cut than not, but it's still not a guarantee that we will. It's going to be interesting to see. It's just going to kick the can down the road. That's what all this printing does. I rather appreciate, I'm talking politics here, I'd rather appreciate that we're going to get this, the hardship out of the way ahead of time now, as opposed to kicking the can down the road. And that includes the trade war with China, getting things, taking some short-term pain now, and getting a long-term bullish cycle later. Because otherwise you're just going to have another major calamity, and you're going to have to cut rates for that. Same thing that happened. The problem that happened with COVID was that it happened when the rates were already near zero. They couldn't do anything but quantitative easing, buying treasuries is what they did. Yeah, poly market. Yeah, poly markets where people go to bet on stuff. This used to be illegal, by the way. You used to not be able to bet on political stuff in the United States, and they just kind of lifted that. I don't think I thought it was, but this last election they let them do it. So, poly market Fed decision in May. Oh wow, so the no change is at 78%. That's interesting. And you can when people put their money where their mouth is, it's a pretty good bet. So no change. I'm on the no change camp. It's not just because of probability. I think that where we are right now in rates are normal, historically normal, and I don't know if the Fed needs to step in at this point. We're not in a catastrophe. Stocks are just down. This is what the stock market do, okay? But I think a lot of people want a rate cut because stocks are down, Bitcoin's down, and they don't want it to be down anymore. They were supposed to be the world's richest people by now. We were supposed to be at, I'm talking about the Bitcoin maxis. We were supposed to be at 200K, bro, or a million, bro, and we're not. And they're very upset about that. So, cat, yeah. So what's the fundamental story on Caterpillar? Looking like the stocks, it's at the 50%, 293.99. It's established some price down here, some price action. When you're wrong, you don't want to break that low, but I don't know. That's a pretty good buy level, honestly. This is a weekly chart, by the way, so this is back to where it was a year ago, essentially. I'm not mad at Cat. I'm not mad at Caterpillar. You need big ass machines to mine the shit? Yes, you do. Yes, you do. Oh, Zagort loves Cat, yeah. By the way, Peter Brandt is like one of the only people that I really care to follow. That and Mark Minervi on X. So I'll post this chart. I saw this week because I do follow him. 1929 top 25 years until meaningful new high. 1966 17 years, 13 years. 2024 top. Why not maybe 7 years or so? Got a better narrative. That's a point. Things go in cycles. Yeah, we're getting into, the discussion here is kind of, it's a generational thing. Like let's say a generation's every 15 years or so. And we're seeing a generational shift, I would say. That's assuming that we don't just revert all the tariffs now. I think it does seem like China and U.S. are going to duke it out right now. For the last 30 years, as long as I've been in living memory, I've known that everything, all the jobs are going to China. All of the stuff we buy comes from China. And this morning, okay, I got a rant. This morning, I was making myself some coffee in my coffee cup. Okay, this is actually not the Chinese knockoff. I don't have it anymore because I broke one of these. This is I do a double shot of coffee because I love coffee, and so I need a mug this size, like big beer pint. And I was making coffee with this new one I had just bought to replace the other one. And I'm listening to the coffee machine. It's pouring it out, and then all of a sudden I heard tink. And if you guys work where there's no glass, you know what that means. And all of a sudden, like the coffee just starts spilling out. It had actually just a heat stress had cracked it right there at the joint of the base right there. And screw China. Screw China. They made a mess on my kitchen counter because of some cheap knockoff Amazon Chinese-made glass. And so, yeah, screw them. So, let's see. You want to hear some real FUD? China has mentioned they aren't going to crack down on U.S. patent protection. They never were. I was just listening to Kevin O'Leary talk about that today, about how so many businesses have been taken out by Chinese copycatting. Like you can't go sue a Chinese company in Chinese courts. Anyway, I'm veering into politics. Stop it, Jen. Stop trolling me into politics. What do you think about shorting the manufacturing of chips? Well, I'm already short NVIDIA. honestly, like I came into this year. I mean, and by the way, I shorted it with long dated puts. I put them on. Well, so basically, what happened was this in Nvidia. I came into this year, and as you guys know, I'm a very, very ultra niche internet trading personality, but people come to me and tell me things. And they told me, hey, I want Nvidia this year. AI, bruh. And Palantir, Nvidia, tech. The thing that's been leading for 2 years. I want more of this. And I'm just like, oh, everybody wants to buy this thing. That just instinctually makes me, nervous. And as you see the spikes up here, Nvidia has been spiking out price action wise through the last quarter of 2024. That was a big warning sign for me. And so when we finally got this big dip here in January, and we came back up to the to match it, I took out puts and posted on my Discord, by the way. Join, by the way, if you want to. Love to have a discussion with you and listen to your ideas. As I said, I bought puts out to January of 2026 because I'm looking at a big, nice, healthy pullback. Because on Nvidia, or any tech stock for that matter, I mean, just since 2021 to 2022, you had a pullback of almost 70%. 67%. And so I don't know why people think that, just a 10% off of Nvidia is a deal. It's not. You're going to get a 50 to 60% pullback on it. Trust me. Well, hashtag not financial advice. I mean, whatever. You know what I'm saying. And so I took it and I financed that put with a diagonal spread, sold against it, such that when it went down to here, I was able to close that off, and now I can sell against it again. And, now we're getting into some real serious volatility. Hit a volume profile level at 89.84, but I still want at least that 50% retracement down there, 81.95 of Nvidia. And so if you're talking about shorting chip manufacturers, yes, but it's interesting how late in the trend people are now starting to think that way when the price action was already set up as such. So could I have done that better? Yeah, sort of. Maybe waiting on a pullback to the volume profile level. Yeah, maybe. See, AMD. Yikes. Woo. This is what, I mean, people, I know I've talked about this in past live streams because, people came in here and we looked at AMD. And by the way, when you have a 50% retracement, you got to make sure this thing holds it, okay? And if it does hold it, you really need this thing to go. You have to have this thing go. You can't have it do something like this. I mean, you can come back and hit it a couple times, but if it does that, you don't want it. And if it breaks that 50%, now you're in what I call it, the valley of risk. And so, yeah, chip manufacturers, I think it's already being priced in, the pain that they're going to be under. I mean, Intel, by the way, I had a small position still, and oof. This is the daily of Intel right here. It's barely holding up. It's barely holding up. That's a weak secondary spike there, but it held it today. Oof, man. Well, they got earnings coming up. Oof. That's either a good buy or a bad one. We'll see. So, Texas. Well, I mean, I'm sorry. Like, I'm just telling you what I see on the charts. I mean, I'm not trying to be mean here, but I mean, I know a lot of people got heavy into tech and chip manufacturers because AI, bro. But it wasn't really clear to me how, just because we were using ChatGPT, I needed to buy semiconductors, especially when that's what everyone was doing. Texas Instruments. I mean, everything that we're talking about here, all of these tech things are going to come to a great opportunity at some point. Texas Instruments, you're at a low kind of here. Yeah, let's see. Let's do a. But see, that's a good trade. When you had the run up from COVID. The COVID low to all-time high as it found it in 2021, and then the 2022 pullbacks were some damn good levels. But you're giving up all those gains now, and Texas is dangerous. That's a dangerous danger zone. It's come back down a lot, but I just don't want Tech this year. I don't want Tech this year. Sorry. I think that, especially in times of uncertainty, we're entering into risk off. Quality stuff is still doing well. Let's look at the let's kind of wrap this up. You got questions? Put them in the chat. Let me check chat and see if there's any symbols to look at. But we'll wrap this up with a sector rotation that we need to look at. My message, just to kind of recap to you guys, wrong thing. There. Look for opportunity. Let's do the last 2 weeks. Energy, big hit energy. Staples doing okay. Kind of like a lot of volatility. I guess we're not seeing very much from that. But if we look at the 20 days for the last month, still it's Staples, healthcare, utilities. What about the last week? Well, in the last week, Staples, healthcare, utilities. Staples, healthcare, utilities. On the graph here, just follow the orange line. Market, we had a top, and it's rolling over into a bear market. That's what the sectors are telling us. Capital is going into quality. Dividend payers and companies with a lot of stability that people need to buy, whether it's a recession or not. And so the last week's sector rotation still continues into quality and not the other things. So let's check chat. Thanks for hanging out with me, you guys, by the way. Long semiconductors, you can go knock yourself out. TFC. Truist is concerning to me a little bit. I actually, just talking my back, I lightened up on Truist, CW. And that's because of what it did this week. It's been a great play for 2 entries of mine. I picked it up in June of 2023. You remember when the banks were going to fail? And it's been paying dividends this whole time. I picked it up again in a trading account here in August of last year. I'm very sure that I would have posted about it. It was here. It was here. So this was the trade. It was a spike trade, 30-minute spike trade. Maybe find it here. On July the 9th, it was a 50% retracement in a stock that I was bullish on, and that worked out very, very well. And in this rally up, I took profit and made the position free. But unfortunately, it found a resistance at the 50% of the weekly, 47.23. Came all the way back down, and I checked it in that account, and now it was going into the red. It also this week came up and held its 50% from the top side, and so I closed that trading position. So I no longer have a trading position in TFC, but I still have a dividend in my dividend account back down here. Probably will hold on to it, give it a little more leeway because I like the company. But I think this is all kind of coming down to rates. In other words, actually, this is above my pay grade. I don't know why it's down. I just know from a technical standpoint, I don't like it anymore. So, yeah. Sorry about that. If you're long, let's see. Max, going back up. Thoughts on IWM? That's going to be the Russell. Russell's, I'm going to guess that it's doing a little bit worse. Well, I mean, in terms of percentage, it's small companies, low caps. And so that incurs a little more risk. That's what's kind of associated with it. You're coming back down to 107.08, which was the floor, from COVID to its all-time high. Let's do a volume profile of that auction range. So your levels to look at the volume profile range is 178. We got above it, and we're still holding above 170. Let's look at the daily. It's hodling, but like I said, I don't think the fun is over. Do not think that the fun is over in equities. And so you got some support right here and you got some support right there, but if we go back risk off next week, which I think we probably will, it's going to come back down. So watch that level. Watch 178.21. You just, when I say watch, don't let the next week close below it. So, all right. Vanguard Dividend Appreciation ETF. Will they catch attention? Well, you'll notice here I have SPHD, which is the Invesco High Dividend Low Volatility Index, and I kind of look at this on a daily basis versus SPY, because what that tells me, are we risk on or are we risk off? Because you're not going to have your tech stocks in here. You're going to have your dividend plays in here. And let's just see, from the all-time high on SPY, we are down 12%, and on SPHD, what day was that? That was February the 18th. Well, this doesn't match. Let's do February 18th. Let's do apples to apples. February 18th is here. From the high there to there, down 7.91%. And so, so quality stocks are not doing as poorly. So that's why I took from that. So Vanguard Dividend Appreciation. Vanguard Dividend. Let me actually answer your question. I'll tell you something. I don't tend to. Is it the high yield dividend or dividend? Okay. Looks kind of like SPY. You might need me to give us more information. I don't chart ETFs because they are already aggregates. They're already a derivative instrument, and so you don't really see the kind of price action setups in ETFs. I mean, you want to do an ETF when you're like, I want this sector, but you don't get very much alpha to anything else. And that's why, by the way, earlier when I was talking about the currencies and countries, I looked at the Australian ETF. I looked at the Canadian ETF. I think it's EWA and EWC. Yes, Canada. You're just not getting that much. Oh, that's a nice spike there on the weekly. Look at that. Nice little recovery. You're not getting that much alpha versus just having SPY, because the American stock market just does well. Now, that could change, but I would rather find companies in those countries that are going to benefit. Australia, yeah. By the way, DAX is one that I shorted. I shorted the German stock market using EWG back in March, and very volatile, but that's playing out pretty well. That's my short right now. I'm not short the U.S. stock market. I am short the German because it got way too overbought. All right, guys and gals, if we even have 0.08% of them. Thanks for hanging out with me. Did I miss anything? There are 5 bank failures in the U.S. in 2023. Just not bank. Yeah, the bank failures were like the crypto banks and the banks that did something really wrong. Yeah. Well, biggest in history, Zagor, that's I like reading those, because whenever you start talking about biggest in history, you what they tend to do is they do dollar value amount, and right now in history, dollar values for everything are at their highest point. You know what I mean? It's sort of like I saw a tweet about, the largest single drops of the stock market have happened, under Trump. Well, of course, because we're in the current year. And if we were looking at SPX from the 80s, those drops, like for instance, not to FUD things, but let's go find 1987. Where's 1987? Before my time, before everyone's time, I think, probably. Maybe not. So the drop, this is a multi-week drop from the high. Let's do the high to the low, 87. That was a 112-point drop. Whoa, in SPX, okay? Big old drop. 112-point drop. What have we had this week? 1,300-point drop. So, yes, this is objectively the biggest drop in history. Well, is it? What was COVID? COVID was only a 1,200-point drop. We have had the largest drop from all-time high in history. See, numbers. numbers do that. In terms of inflation adjusted, see, now you're speaking my language. Okay. Largest bank failures in terms of inflation adjusted. Okay, now we're talking. You just debunked my whole point I was trying to make. Thanks. Overbought. Yeah, that's me. So, that is interesting. That is interesting. Washington Mutual was the biggest. Yeah, these I can't remember. Was First Republic? Were they really? What was their cause of failure? Was it? Were they big? I know these two were crypto. Silicon Valley and Signature were big crypto. Collapse. What did they do wrong? What am I doing? Why am I reading? Why am I reading things? Hold on. Actually, by the time I'll tab it. What was the cause of? Keep it to one sentence. Just give me the information. Rapid interest rate hikes eroding the value of its long term. Well, yeah, it's bonds and stuff. Uninsured deposit. Okay, so it's just a bank run, basically. Anyway. No. There was no point. We're coming to the end of this. I'm just riffing. All right. Well, thanks, guys. Thanks for hanging out. I had a good turnout. I hope everyone got some food for thought. Make sure that you come and hang out. And wait, let me find my window here. Oh, did I lose it? Yeah, there we go. Make sure that you come hang out. Make sure you if you liked what we talked about here today, make sure to do the algorithm stuff, and join Discord, links below. I post the stuff that I do there, and I like to hear people's response because I want to crowdsource this, guys, because there is a bull market out there that we need to find. So let's all help each other find it. All right. Thanks, guys. Have a good weekend. We'll see you back next Friday.